Okay, so Chang Chapter 6 kind of groups together a bunch of the other processes that are part of any accounting system. HR, fixed asset, production, which is really conversion systems, and financing. We will talk about 3 of the 4 of these. We will talk about HR and fixed assets. We will talk about the conversion process. We won't talk about financing, which is why it's grayed out. Okay, so putting it in perspective, you have payroll and fixed assets, which are 2 of the functions we're going to talk about. The conversion process over here, and the finance process. These in conjunction with the first 2, revenue cycle and the purchasing cycle, are all of the processes that lead into the development of the general ledger and the financial statements, etc. So after we're done with this, we're going to be talking more about internal controls, security, things of that nature. So we're going to shift the focus of the class starting on Wednesday. Okay, HR. So we'll do each of these separately. HR. Some of the key terminology from HR. You have the HR department. How many of you have worked for companies where you've gotten to deal with the HR department? HR is an interesting function. They're both your best friend and your worst enemy. Right? They're there to protect you from the perspective of regulatory requirements and things of that nature. On the other hand, they're also there to protect the company from you. So they toe that line. Everyone knows what an organization chart is. A timesheet. If you have the intention of becoming an accountant, you'll be dealing with timesheets, whether they're online or on paper, because the timesheet is the way that your time will be associated with a specific client or customer, so your time will be charged to that customer. And then a payroll register is just a listing of all of the payments that have been made. HR has 2 functions, a personnel function and a payroll function. The personnel function, they hire, they train, and they make sure that the company employs only qualified individuals. They can ensure that the company is in compliance with all regulatory requirements, like equal opportunity employment. And they provide the basis for the payroll activities. You think about this from an IT perspective, they create the employee file as part of the personnel function, or the employee record. That employee record is updated on a regular basis as part of the payroll function. The second function, payroll, they maintain the records, things like how many dependents you have and all that kind of good stuff. They make sure that they report on any deductions that you need to make. They make sure there's timely and accurate payment. Now, timely and accurate payment is not only to the employee. It might be to the government agencies, to insurance companies, or whatever else. They have to split your salary and give it out to all of the interested parties who get a piece of the action when you get paid. And they record the cash distributions because it's critically important that for every company, cash is forecast and monitored to make sure that cash is available as needed. So you could look at it as the employee file, if you would, the employee record. The personnel function hires employees and processes information, maybe maintains some information if you change your dress or whatever. That's going to be done as part of the personnel function. And then the payroll function periodically pays you. Okay, so why is that personal record, the employee record, accessed frequently but changed infrequently? How often do you change the information that's associated with you as an employee of a company? But it's accessed all the time, right? It's accessed for payroll. It's accessed if they want to apply commissions to your account because you're a commission salesperson, etc. The calculation of net pay is complicated. Okay, let's talk about some of the inputs. To HR. Just like you have requisitions when you want to get supplies or you want to get new inventory, you have a job rec. How many of you have ever been involved with a job rec? I've been involved with many in my life. You have to, you have a head count that you're entitled to in the department. Maybe you want to add to that head count, or if somebody leaves and you want to replace the head count, you need to put in a job rec to make sure you've gotten the okay from the organization to hire. And then personnel action forms are simply changes. If you change your number of withholdings or whatever it might be, that's a personal action form. Change your address, some action that has to change your master file, the employee master file. Timesheets. Again, you all, if you're going to become accountants, are going to do timesheets. The challenge with timesheets come in when a project hits a tough point and they're looking for overtime, and the project doesn't have overtime in the budget. And so then that's where the real challenges arise. You need to have all of these kind of authorizations for these things that we just talked about. 403Bs, 401Ks, etc. Tax withholding forms. How many dependents do you have? Some of the outputs, a listing of employees. Your paycheck is an output, or your wire transfer in the modern world. The actual payments. You're not the only one who gets paid every time you get paid. Other people get paid. The government, the union, the insurance companies, etc. Registers of all the checks, journal entries essentially. Summaries, reports for tax purposes, and information for your financial statements. That's all part of the HR function. Like we said, so there's a lot of fairly complex mathematical calculations. They're somewhat routine, all the stuff we talked about. Most companies, if 99% of companies, either use a standard application system that they did not build for themselves, or they outsource the payroll function. What's the largest payroll outsourcer there is? ADP, by your former senator, who's deceased now, Lautenberg, founder of ADP. The systems include the payroll system, ADP, or something like it, a system to automate timekeeping. And back in the day, it was paper-based. I'm sure it's automated, internet-based now. And, of course, wire transfer systems. I think I explained why it's outsourced. You outsource it because it just makes economic sense. These calculations are the same for every company. They're not really unique differentiators. If you do payroll better than another company, you're not really going to get better employees, and you're not going to make more money. There's no real differentiation in the payroll function, and so you would not want to build your own system. You're not trying to hide a crown jewel, how you pay your people. And remember all the way back to when we had batch versus online processing? Payroll is a batch process, right? You pay every couple of weeks, and you do it at night in batch, and just get it taken care of the 15th and the 31st, or whatever that is. So it's a batch function, not an online function. That's payroll. Okay, so I want you all to raise your hand when you've done one of these things, okay? Don't lie. How many of you have exaggerated the number of hours you've worked? How about vacation or holiday time? You took a vacation data. This one is a bigger deal. How many of you have falsified records to make it look like you sold more than you realized? How many of you have overstated your expenses? Okay, so there's a lot of petty fraud with payroll. That's it for payroll personnel. The second major function is fixed income processing. Fixed income. Big ticket items. A factory, you're building a factory. Buying a big backloader, big tractor, whatever the case may be. your Hertz and you buy a fleet of vehicles. Fixed assets. So, or you're buying significant hardware, computer hardware, furniture, buying real estate, etc. Unlike the purchase of inventory or supplies, which only really care about recording the purchase, here you're also looking at the maintenance, valuation, and disposal of these assets. These assets have a life that you have to manage all the way through with fixed income. So for most companies, again, just like with payroll, you would not build the management of your fixed income, or your fixed assets is not a unique and kind of particularly evaluated process. So there is software that you would purchase to perform this function. Enterprise asset management software to manage the fixed income process. One of the challenges is because this is not, a company is usually not in the business of buying fixed assets. They buy fixed assets to do their business, with the exception maybe of like a rental car agency that's buying fleets of cars. And they're going to have great management over that process because they need to. That's their lifeblood. But because this is kind of a sidelight of what they're doing, they don't have very strong controls over it. So it does run the risk of fraud, and big fraud at this point. Records that are not really up to date properly because they're not in the mainstream of the business. People aren't thinking about them enough. And similarly, they might be wrong or they might be untimely. People get to it when they get to it. Basically, because they're non-routine, automation is often sporadic. So some of your objectives are you want to track your purchases and your payments related to the fixed assets, record maintenance during the life of the fixed asset, from time to time revalue it. Other of your classes might describe when you would need to revalue. If you have to write it down, if it's lost value and it's clear that it's not going to recover that value over time, you might write down that asset from time to time. So you might have to change the valuation. You allocate the cost depreciation. That's a separate category. That's just the natural life. You get to depreciate it over time. At some point, you're going to dispose of it and hopefully get some assets back in return. And then when you do that, you need to account for a gain or loss versus book. Since you started off with a value, you depreciated it, there's some book value. When you dispose of it, that doesn't really have to relate to the book value. You dispose of it for what it's worth to you or the marketplace. And then you have a gain or loss between the book value and the actual value. Some of the inputs to fixed asset management are purchasing rec. There you go, a rec again. You want to buy a new fleet of cars. You have to put in a rec for it and have somebody okay it. Just like in any other purchasing process, you have a receiving department. When those cars come in, you probably want to check to make sure they're what you ordered. And you get an invoice. If you're doing construction, you have a work order for the construction. Changes over the life of the fixed asset, as it might move locations and move departments. It might be sold, traded, or retired. Repair records. So you update money invested into it. Some of the outputs, a register of all your fixed assets. That would be part of the fixed asset enterprise system. Depreciation registers, repair and maintenance registers. As you retire them, the value at disposal, and then inputs to your financial statements. So there are a few sub-functions within fixed asset. You acquire the fixed asset. Again, it starts with a rec. You outlay large quantities of cash. These are usually big ticket items. Generally speaking, it requires some significant authorization, both from the terms of you want to have a senior person sign off on it, but also from the perspective that you need to make sure you have budget for it. That if you're going to make the expense, that you have a way to pay for it. So you'd have to ensure that it's within your capital budget and it requires, you have the appropriate senior authorization. Each fixed asset or each class of fixed assets might have their own subledgers that you'll monitor. Generally speaking, you would do investment analysis, whether it's IRR or ROA or whatever, ROI or whatever you're going to do. Make sure that the investment in the fixed asset is worth it for the company for the future. So to authorize, as we said, you'll do an analysis. It's considered within the capital budget, and it's reviewed and approved. Fixed asset continuance. During the life of the fixed asset, as you do improvements on it, it changes the basis. If anyone's ever owned a house or an apartment, when you make improvements on your house, it goes into the base cost of the house. And same thing with any other fixed asset. You want to do that for tax purposes so that when you sell it, you have less of a capital gain or create a capital loss. When appropriate, you'll update the valuations, you'll track it, and you maintain your depreciation schedules. When you dispose of it, you have the date of disposal, and you depreciate right up to that date, the date that it was disposed of. At that point, you may have fully depreciated it. More likely, you haven't. But you have to, you have to close out those depreciation accounts, zero them out, and then you have a gain or a loss on that asset. And you would use asset management software to do this. Generally speaking, you would purchase it if you bought like an SAP or a large enterprise-wide software package. This would be a module within it. Probably the biggest ethical issue related to fixed asset processing. Very different than payroll. Payroll is about petty little things that people do. I mean, payroll could have larger things that you don't hear much about. You could create ghost employees where employees don't really exist, but you somehow get them on the books. That doesn't happen very often. But what can happen with fixed assets are the misclassification for financial statements between fixed assets and expenses. It's a fine line between them. Why might you want to turn an expense into a fixed asset? If you were able to do it. So instead, it could be an expense. You might have bought something as an expense, but why might you rather have it be a fixed asset and be capitalized rather than expensed? Anyone have an idea? Well, let's say the company's not doing well, and your expenses are really high, and you're taking a loss. Well, instead of taking a loss, maybe you could turn that into capital expense, and suddenly you're not taking a loss, and your balance sheet looks better because you got all these assets to improve your balance sheet. That's the thing. You could expenses become more assets on your balance sheet. It looks good. It'll make your operations look better because you're reducing your expenses and increasing your fixed assets. And that relates to depreciation because while you're increasing your fixed assets, obviously it becomes an expense over time as it's depreciated. But you're just pushing it off as an expense. What about the opposite? Why might you want to have some capital expense look like it's an operating expense? You're having a great year and you want to have all these expenses so you don't show any profit, so you get your taxes down. So this is monitored. You ought to be doing the right thing. Certain things are capital expenses and certain things are operating expenses, and you should be doing it right. But this is a great opportunity for fraud, and many people have gone to jail for trying. Big ticket items now. Okay. The conversion process, the third of our three. Conversion is really what does it take to turn raw materials or resources into finished goods or services. Now these raw materials are materials, labor, and fixed assets. All of this stuff that you have becomes something finished that you can then sell, whether it's a product or a service. It's converting So the conversion process starts with you want to track your inventories, the purchase thereof. You want to plan your operations. Make sure you have systems that will control your manufacturing costs and optimize all of your resources. If you're an accounting firm, you want to make sure you're optimized in terms of your staff. Ensures quality. Provides data both for cost accounting and financial accounting. It starts either with a production order or sometimes just with a sales forecast that gets the production going, that authorizes the manufacture of goods, then dictates the schedule. Another rec here. This is kind of an internal rec, so if you need materials for building something, you have a materials requisition, so it'll go into your stores of inventory to get those materials so you can start the process. You might have to go out and buy it, or you might have it in inventory. Bill of materials, who knows what a bill of materials is? It is the listing of everything, both in terms of what it is and the quantities that you need to build a product. And so it really comes from engineers who say, here's what it takes to build a jet engine. You need, a ton of scrap metal, and that's it, or whatever it might be. So, and then it tells you you need rivets and scrap metal and whatever else you might need. And so this tells you, the bill of materials tells you what you need to get the rec for in order to get the materials so you can build whatever the production order tells you to build. You have some prices for the materials. You have a production schedule. You have time cards. So accounting firms are just job costers. They have jobs. And time cards are a way to assign labor to jobs. Some of the outputs, how much raw materials have you used to see if you're using, if your bill of materials says you should be using a ton of scrap metal to make a jet engine and you use 1.5 tons, then you need to understand that you probably don't have as much scrap metal as you thought you did. Every once in a while you do physical inventory. It's where you go and you look at what you actually have and compare it to what the systems say you should have. I think we went through that already. Monitoring inventory levels. Production cost reports. Make sure that you understand the cost of production and the status of your various jobs. This is true for work that takes long periods of time to complete, that don't complete very quickly. And financial statements. Logistics. So it starts with a forecast or an order. You do stuff to get it to converted, and then you report on that. Can't make an easier picture than that. Logistics is the logical, systematic flow of resources through an organization, planning, resource management, and operations. Planning first. You have R&D. You have capital budgeting to make sure you get money aside so that you can do what you need to do. Your engineers create the bills of material and any lists that are needed for operations. And then you have master schedules. That schedules the factory floor and considers the production orders. That's the planning process. Managing your resources. You want to manage your people and your inventory. Make sure you order new inventory as needed. Somebody who doesn't have me in cost accounting wants an economic order quantity. The cost of purchasing versus the cost of carry. Right? Cost to carry being what does it cost to have inventory in warehouses, and both in terms of real cost of having to have warehouses and security guards and that kind of good stuff, and the opportunity cost of you have money invested in that inventory that you could have invested in the stock market or something else. So what's your required rate of return on your capital? And the cost of purchasing is just what does it cost in order to put out a request for purchase. That's the ordering cost. Cost of purchasing is the ordering cost. And that's the trade-off that creates the economic order quantity. You don't need to know that calculation for this class. Then you have to monitor your operations, both to make sure you're getting your goods out and that they are at the quality level that your customers demand. It could be process-based, job-based, or something in the middle, batch-based. Your systems. Obviously, computer systems are very important in this space, and it's more than just data systems. Robotics are part of this nowadays. At the minimum, they're going to determine how much materials you need. They're going to help you do your scheduling, create PERT charts, if you would. Make sure that inventory is transferred through the process as appropriate. And so much of this is automated in many factories today. And then they prepare information for your financial and cost accounting systems. There are a couple of places in the modern factory setting that only really can be done because of IT. The first is activity-based costing. Remember ABC, activity-based costing? That really relies upon a very detailed understanding of costs at every step along the process. You need to have strong IT systems in order to monitor those costs. And clearly, just-in-time inventory management, everyone's heard of that, requires very, very strong value chain integration from suppliers straight through conversion process. You need to make sure that when you expect to have inventory on hand, it's there. Otherwise, the factory is going to just shut down and wait. So both of these areas strongly require IT and accounting systems in particular. There are 7 interesting systems that are involved in the conversion process. Computer-aided design, computer-aided manufacturing. Computer-aided design is really kind of using 3D graphics and things like that on a computer. Computer-aided manufacturing is really CAM, which is robotics. Materials resource planning, a higher grade of materials resource planning, which includes up and downstream contacts. ERP, which enterprise-wide, really robust big systems by SAP or Oracle. Computer integrated manufacturing systems and just-in-time systems,